All right, guys, let's do this. Now, I don't know how long I'm going to be here, but I'm going to pop up the chat here in a minute. Give me 1 second, please. Oh, one person. Thank you. I think that's my own. That's my own self over here. All right. So let's go. Yes, since I don't have much time, I'm going to go straight to the point and not even mention GME right now. So let's just have people wonder why they're tuning in the first place. Okay, I'm just kidding. All right, so I know people are, very emotional, even me included. I was like, oh, no, I'm kidding. Honestly, that's what I expected. And, I try to tame my expectation a little bit. Of course, I was hoping for the upside by price movement, but hey, it is what it is. That's why I don't, do buy any calls in the sense that I will break my portfolio here. So I'm trying to be smart about like buying what time to buy call and what time to sell put, right? And so again, this is what one of the market sway fluctuation, and this is the nature of this stock. If you want to kind of look at GME in that sense, right? But before I mention GME, since people are not popping in yet, let's mention this real quick. Of course, this gentleman has been pumping. Well, now he's pumping Nvidia. $50,000 in Nvidia is all you need to retire, right? And he make a case in which he's doing the option here, as you could see, selling covered call, like he's promoting, kind of like playing to the downside a little bit here. If you want buy calls, wait, how much money do we make per call contract here? Now you have to watch the whole video. I have not even seen it, but again, this is just to promote the volume coming into Nvidia. Of course, he has his own course and all that stuff. I'm not part of it, but if you're interested in learning more, you might want to pay the guy if you want to. So I'm sure he's knowledgeable about what he does. But of course, I usually learn it through, a free video or through my own, understanding of things, kind of like placing the order myself so that I will learn as I go, hands on. Right? I hate learning from other people because then their personality is not my personality. So and that's one of the cornerstone that you need to understand in this market, if you want to be a better investor versus a better trader and all that stuff. So to be better at anything, you have to learn a whole bunch of hours and hours and hours, to be an expert on something, right? So I'm not scoff at this gentleman here on pumping in video or anything like that. But again, he promoting the the most popular stock here, and so those usually are the stocks that you could make a lot of money selling call, selling puts, all of that, right? Downside, sideway, or whatever. You have the strategy for everything on option. Um, but that being said, though, Nvidia is all, you heard my view on Nvidia, and I've heard Moran's talking about it numerous times, and I agree with him wholeheartedly. So, I think the risk is to the downside at the moment for Nvidia, in my opinion. So, yeah, do with that information as you will. Um, okay, so let's kind of like take a pause here real quick because I wanted to kind of scroll down the X, right? Of course, for me, I'm still bullish on this company. Like long term, still have my back intact. And of course, I sold 3 covered call today. Because I was like, might they might drop the price down before the earnings, and then I kind of like buy to close my position. Kind of waiting for the spike, but it never did. So what I did towards the end of the day, I knew that the price might come back up because of the power hour and all that stuff. And to me, this is an overreaction of whatever, Ryan Cohen was not telling in the market here. And so, the guys is not here to hype anything. And we know this, right? He's here to show you the result. If you think that he's doing a bad job already, then leave. It's simple. He's not here to hype anything, okay? And if you think that Ryan Cohen somehow killed the squeeze, then you're just here for the squeeze. My perspective on that, I'll share you in a moment, and hopefully it will make sense in the end, okay? Whether you are, every market participant here need to learn something from this, okay? Now, um, of course, this trend line I was observing as I go, and it was like, okay, there's a trend line here. There might be a support coming over here, and so that's why I was waiting a little bit here. Of course, I was kind of was at work myself, kind of monitoring somebody going live, right? And I was like, okay, this makes sense. So let's buy. Let's. So I sold a put on here. So I wanted to get exercise. So I went in $28 dollars to strike price here. So only one contract because I had enough because I was kind of profit a little bit off this drop right here. Selling my call in the morning, early in the morning, because I was seeing this right here, this drop. It's like, oh, okay, it's coming lower. Because I was kind of like, okay, what the worst they could do is just dip it down and then rip it up really quickly if there's good news coming like acquisitions and all that stuff, like everybody is like looking for that type of thing, right? And of course, like Ryan Cohen come in just plain vanilla. That's it, plain vanilla. And I love that. I kind of expected that. Remember what I said, like, in my past video? I was like, I hope he just come here, say a few words, and mic drop. Done. That's usually what the earnings call. And of course, people were just trying to hype it up and all that stuff. Now, of course, DFV, tweet afterwards about some Bruno thing, like in the green in the future. And what did he do? Let me see. I know like people think that I am investing based on memes over here. So I'm going to play the game a little bit here. Ryan Kitty. So he was tweeting this right here, green, right? Now this movie, I guess it was this gentleman over here, this cartoon is misunderstood, and all he's trying to do is just helping people here, right? And it seems like he's sad, but he's just, I, I guess I didn't watch the movie, per se, but I did watch the clips of it. Essentially, what he's trying to say, well, of course, like I can't decipher that. I don't know the codes and all that stuff, so bear with me here. But I think he is trying to say, hey, red is false alarm here because this guy was complaining about how um, he was misjudged or something, like the referee was having a bad call on him, right? On his what is it when you play tennis and you aced it? I think that's the term. When you ace it, then you just slam dunk it or something like basketball. I'm not a sport person, so sorry about that. But essentially, the referee was having a bad call, and it's a red candle, right? Maybe, and he's saying, "Hey, there's a green coming." So remain to be seen. Again, maybe pump it dumb, whatever, right? No, I'm kidding. No, I just think that he knows the algorithm pretty well, and that's just my perspective here. Um, oh, I didn't see Ron Kitty newest tweet yet. Oh, okay, good. Yeah, so he did tweet. I think it's like 8 hours, so during the market hours. So, very, very, hopeful. Of course, like I was just baffled at the price drop over here. But nothing to be alarmed about, right? Because like I was watching this, and it's kind of like similar to the first dilution, right? So when we kind of hear the news about the dilution of the first one, it's right here. Boom, like price drop, like, oh, it's done, it's over. That Brian Cohen is the most evil person, and then next thing you know, it just like so I'm sure it's gonna be like somewhere here or somewhere over here, right? In my opinion, tomorrow they're gonna kind of bring it up a little bit and then drop it back down again to try to scale or scare as many people as possible, or just boring, just a boring price action so that those day traders are not going to look at it. And what the ones you keep an eye off of it, here we go. Boom, right? But I was looking at this fear and greed candle as well, on the hours, on the hourly right here. And it seems like we're on the neutral, right? Neutral. So, which means, there might be some downside coming in because I'm sure news 24 hours, they already come out and say how Ryan Cohen is not giving them guidance and all that stuff. And I don't get why shareholders give him opportunity. All of the negative sentiments gonna come back to this stock again to try to get you to sell, right? Of course, we've been here for a long time. I've been here for a long time. This price action is actually very good for me as a shareholder for a long term. Okay, like yeah. So all I know is, yeah, Ron Kitty owns 9 million shares, and if he doesn't complain about the 12%, then no one else can complain about it. Yeah, of course, the 12% drop. Um, touch my support line perfectly. Yeah, of course. Yeah, Kyoto, like you are so right about this because I feel like the world is watching this line right here. You think that people are not like salivating, like people are long, right? People are looking to buy cheap GameStop price. Come on, right? It's ridiculous for people to just like, oh, this is over, sell, you lose, you lose, you lose. I'm like, okay, I bought since here too. Like, I've been averaging down since here, right? I bought since here. So, my second account is actually green. So I'm double my money actually. So, you know, the dollar cost average for this particular stock is very low for me at the moment. Now, the other account that I have that I kind of like went all in back uh, 3 years ago, right? It's still, at the 40 $45 dollars per share. So that portfolio is a long-term back. Like that's my moon back right there. And so I don't mind, leaving that bag there for a long time. So I'm here just like Ryan Cohen said, right? He's here for the decades. And even when he took over as a CEO, he said that too. Like, hey, I'm here for the long run. Buckle in. I'm not getting paid. So we might as well, I'm going down with the ship. I prefer the latter. Right? That's what he said. And he's been demonstrating to every single shareholder out there who trusts, like Rowan Kitty, right? Um, that's why he doesn't want to own any call option for long. He was exercising uh, a day? No, no. A week before. Huh? Yeah, it was a week before. He was exercising his call. He sold his call to get into shares. So that means like shares, you can't, there's no expiration on shares. Right? So 4 million shares is more than enough for him to be a billionaire again, right? But he wants the journey, and I'm sure he's trying to get many people to realize that as possible. Right? And also to keep in mind, Roy and Kitty what is it? Average cost, okay, for those shares is $23. $23. So, I mean, the guy has shown you that he's been averaging up as well, right? Because he's got here since the beginning of this play. Every single new media is out there tells you that he sold already. He sold up here. Oh, he's gone. This guy's gonna sell. Well, he doubled up over here. And guess what? If he hadn't add more, then his cost average would have been somewhere over here. People don't realize this, right? Like, calm down. He's been buying those call option and convert it to shares. Buy call option and then convert it to share. Every chance he has, I think, right? And he's been just focusing on GameStop, just one, right? And he beats every person, including us, who's been in this play, long after it was quote unquote squeezed already back here, right? And everyone, including me, I thought he already sold too. And which, like, yeah, I mean, of course, he's going to take profit. Like, it's 40 something $1 million, right? And come to find out, when he came back, he had 5 million shares. So, how do you think he could do that? Well, because he just showed you the strategy there. He just timed it perfectly, or at least close to perfect as possible in order to take advantage or capitalize on the movement of the volatility of this particular stock. And yeah, and if you do that consistently, I mean, 3 years, that's like, if he does that every week, think about that. That's like, man, 150 calls or something, or a chance for him to kind of profit off of the call options or sell. He probably sell calls or something like that. If he does, like, hey, we would never know. But all I could go by um is what is being, said here. I mean, or is what he posts for us to see, right? Um, yeah, sorry. You pretty much were okay. Okay. It's going to bounce and we will push back to 40 and 50. Okay. That's very optimistic. I truly believe that too. And it's going to be least expected, right? It might be like 2 weeks from now. And then people are going to be like, oh, I bought some puts. Like, so again, if you want to guess the ebbs and flow of the market, you have to be like on the point here. And that's why, like, day trader, they get so cocky sometimes that they think that they get it right all the time and all that stuff. No, 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 no. Like, sometimes you get it wrong. Sometimes, just like Ron Kitty was saying on his, um, you know, like the video in the past, it was like, yeah, I don't always get it right, but I'm a value investor, and he's been demonstrated which company he thinks is the best company to park his hundreds of millions of dollars in, right? So I don't know what will happen after though. Yeah, I mean, I don't know. Again, to me, I'm here for the long term. Anything under 50, I'm just gonna average cost down. And so this one is going to be a price target that I am kind of like looking forward to, kind of averaging down more. Now of course I have my sell put here up here in the 28 for this week. So I'm hoping to capture that premium a little bit here. My break even point is 24 something, 24.60 or so. Because I sold it for like 300 something dollars. But that is a sweet spot for me to kind of like, even if it got exercise, I'm gonna use that premium to accumulate more shares, even at this low price too. Of course, like, there's anything's possible from the downside, right? Or short term um play, because look at this. If you look at the daily candle here, you could see we are in the territory of greed, right? For the daily. But if you look at the weekly, right here, we're still in a fear. So there's nothing, like, again, you have to have a longer time horizon here. And this is why, like, people get so frustrated, because they are buying short dated call option, hoping that it's going to go to the moon, right? And then they want it now, now, now. Why don't you tell us now? Now. I want it now. It's like, okay. The guy has demonstrated that he's been doing consistently, adding value to shareholder. He said that. And guess what? He did add value to shareholder. So let me show you something here before I go into my main point over here. Okay, so I have not been monitoring the short interest quite a bit on Intel. I used to do it a lot more. Um, but I've noticed something yesterday. I actually have a video that I did um, record already, but eh, I'll just go through it quickly over here. So it seems like the shorted has been some of the shares that were shorted has been covered. So because I remember like 50 million shares or something like that, I think Moran shows 60 million shares being shorted before the dilutions and all that stuff. So again, this might be accounted for the dilution, so to speak, right? And of course, they have plenty of time to cover because of the volume of this company. Been trading for quite steep, right? The volume coming in, hundreds of millions of shares trading each days, um, like much more so than the past 3 years, right? And so I used to see 3 million shares, 2 million shares, 5 million shares, very low volume um, was there. But as far as like the short interest, it used to be like 21 or 26, 25. It really depends on the time period in which it was shorted. But it seems like it's coming down now. So from that, of course, I have to go by this. I think that short has somewhat covered already, but still, 14% is shorted of this company. Now, but my perspective is no harm, no foul, right? Because what do you want to do is that you want those shorts to get out of this company because then they are less likely to bash this company down, right? They're going to try to continue it because they still have four 40 million shares shorted of this company. Of course, they don't want you to kind of like, buy into this company. Again, speculation based on what I see on this data over here. So at one point in time, there were 100 million shares being shorted to the to or as a short volume, and then they just starting to cover, right? Um, Now I think Ryan Cohen did the right thing because he just hold on, let me see, that's not it. Which one? Right here. So this particular chart is going to show you that Ryan Cohen has been adding shareholder value, like even though through this dilution, like quote unquote, right? I have to say dilution, of course, that term just elicits such a negative connotation to it. But I assure you that shareholder has not been screwed whatsoever. Unless you are an option holder, then of course you're gonna get screwed. Like, so you have to pick your battle here. Do you want to be on the winning side, or you want to be on the loser side, or win sometime, right? Or in a small window or period of time. So that's why, again, buying call option is so risky. Unless you know the risk, unless you know when to strike, you will lose most of the time. And there's only one Roaring Kitty in the world, so don't try to copy him. Um, Again, this is once in a lifetime, and only one man could do that for you. Now, I'm sure he's putting this information out for free to try to help people to realize the value of GameStop by, convert his call option to shares. Um, I don't know if this is what he's intended to do all along, because he could have sold those call way earlier and get $1 billion now, but he chose the long path. In my opinion, obviously, right? People have their own opinion on what Ron Cuddy is trying to do. I'm sure, some opinions says that he's greedy and all that stuff. I don't think so. He's just yeah, take advantage of the market here, inefficiency in the market. That's what Wall Street has been doing for the past decades, right? To screw over retail. So of course, this is the pinnacle of success for anyone who wants to kind of emulate him, right? But yeah, so to me, this is a story that hasn't been over yet, right? He could be in the board of director in one time, and then a surprise news. Um, just because it doesn't happen right now doesn't mean that it's not going to happen later on in GME history. Now, like I said, people are going to talk about this company for decades, and this is what you want your company to thrive on in a sense, right? I understand there's some negative connotation to that because anytime you have retail owned company, people tend not to want to invest in. Now, when I say people, I mean institutions. Okay, um, but don't get me wrong, institution is coming in. It's just that they want to be hush hush about it for now, and then they're gonna pump it to you later on when it's time for them to when they're already accumulating the shares at a lower price, and then they're gonna stop the negative sentiment, like the negative news, the negative article, the negative segments about GameStop and all that stuff. Same way with Nvidia, right? When they are quietly dumping Nvidia, offloading it as the price rise, they're not going to necessarily tell you that Nvidia is going to run out of steam soon. And we all know it's just a bubble waiting to happen. You've had people coming into Moran's live stream touting that they're making money on Nvidia, they're making money on Tesla and all that stuff. I understand, like, when CEO are hyping things up for you, you're gonna be like, eating it up like crazy, right? And I have like people who are, talking about GameStop in a bad light, saying that Ryan Cohen is just like any other oligarch, right? When he takes some equity, sorry, takes company shares that we voted for, like as a shareholder before that. I remember that vote to increase the float to 1 billion shares, right? And then that was around the time of the split, the 4-to-1 forward stock split or dividend. And so, those type of votes has already been kind of like on the proxy. And again, if you've been a shareholder for a long time, you should know this. Like nobody should be like crying at all. But anyway, so let me go through this number right here, what it means. Now, this is the first dilution right here. So we got close to $1 billion at this price point right here. So from then, the book value was actually Ryan Cohen was able to get short seller, quote unquote. I'm assuming, right? Some of the short seller, the traders, the gamblers, the people that are betting on the call options and all that stuff, to pay $20 a share, okay, or $21 a share, just ballpark here. And with that valuation, with that price point, Ryan Cohen gets them to pay 4 times the book value, okay, 4 times, because the book value then was 4. So if you divide this by book, then it's 4 times its book value. Okay, this is the valuation that I got. And again, this is just illustrating from 4 to 6. So it means that your shareholder equity went up at that time, right? And so what happened? The short interest was high, yes. Now the short interest is lower. So 40 million shares is being bought. So the second round, of course, this is by short seller, sorry, by the short interest people. And then the second round, he gets them to pay even higher, right? So if you account from $6, so now, at this valuation from that, then you get 4 times the valuation, even more. You see what I mean? And so again, he increased 6 to 10. So from 4 to 10 altogether through this dilution. So this is why when you say dilution is bad, it's not necessarily mean that at all, right? And this is demonstrated because the balance sheets of GME is so strong that any dilution will add shareholder equity value. So that makes me think, okay, so there's a lot of market participant out there. You know what? Let me take a break real quick. I will be right back. Hold on. Give me 1 minute. So I will come back and cover my last point. I will play some hype music here. My favorite song. I'll be right back. enjoy that. Sorry about that. I had to take a sip of water. All right, so let's drive this point home real quick. Now, I don't know how long will I have. It's 9 o'clock already. All right, so maybe in a couple of minutes. Anyway, so yes, so the short interest has been decreasing. So of course, my thought is like, hey, at least Ryan Cohen got the short to cover their position at $28 a share. Okay, call it as it is. You think that he's evil, but hey, if you're shareholders, you have increased double, not even double, like even more than double your shareholder equity. And so depends on where you bought at. Hey, it is what it is. If you want to play in this, or if you want to make GME as just your casino, at least pay some dues, right? So that's my perspective here. All right, so I have another slide over here. I was just thinking about the in terms of the casino and in terms of market participant, the similarity between the two, and I was like, well, let me try to kind of put some kind of a different perspective on this particular you know stock market or particular um, whole situation over here. Now, in the casino, you have a casino, right? And of course, people go to the casino for different reasons, for many reasons. Some of them go for, foods and all that stuff. But the main reason is to, win some money or lose some money, right? It depends on what side you want to be on. Now, of course, over here, there's a couple of different things. Of course, this is just three different ones that I could think of that kind of relate to this situation here. You have dealers, you have the facility, which mean the actual place or table, scrap table or whatever you have available for people to place the bet on, I guess, right? And then you have the gamblers. Now, usually, if you have the choice to be any one of them, which one would you pick, right? If you're smart, you would want to be a facility, right? My point. You would want to be the facility because you will provide the place and they will pay you to come and play. There you go. And you could also be the dealer, right? The dealer is just so, you provide the liquidity for people to gamble on. And so, but if they win big, you're going to lose a little bit uh, of your liquidity or equity, so to speak, or lose, the lump sum for the gamblers out there. But usually dealer has deep, deep, deep pockets, right? So just make sure that you have the ability to withstand those small wins that the gambler is able to take out. And then you'll be golden. But also too, if you know, the casino that owns the facility and the dealers, then, you kind of like say, okay, hey, you're good. Now, I kind of equate this to a little bit of like, I know it might be a different, might be a stupid analogy here, or, but bear with me though. If I make the analogy, stock market is actually a casino, right? So in the casino, there's a facility, and I thought, hey, the facility could be GameStop, right? GameStop as it's a platform, or it's a platform. It's a stock that people are betting on, right? But this facility has I guess, expenses, and to run well. It costs money to buy those tables, buy those blackjack, the equipment that is needed, right? And so the facility is GameStop. And then the dealers are the option seller and shareholders, in my opinion, right? And so shareholders obviously are providing the shares for them to bet up and down. Depends on what side you're on, right? Or the liquidity enough to buy 100 shares or whatever. If you know option, you would understand. But for the sake of this argument, you're just providing liquidity for people um, to gamble, right? And of course, you're taking percentage at a time in order to kind of like consistently building up your portfolio in that way. So this is where I want to be, right? And of course, I am in GameStop for a reason, as a facility in order to, be a dealer, right? again, this is what side I want to be on. Um, Now, for people who are gamblers, usually they are win. They are win some, lose some, and if you're good at gambling, if you're good at day trading, if you're good at buying call at the right time, buying put at the right time, great, good on you, but only take one day of wrong, like today, for example, for people who buy call thinking it's going to go up to the moon tomorrow and they're going to make gazillions of dollars tomorrow. That's not going to happen overnight, right? There's a slim chance that it might happen, gonna happen in the time in which you predict it to happen. And so short dated call option is not a very smart thing to do. On top of that, the implied volatility is so high. Now, when the implied volatility is high, the option seller is usually at the advantage here. Okay. So yeah, I mean, this is the analogy that I implore anyone to think of it as that. So, knowing this, I've been if you think of that um, term, you would say this is the reason why Roy and Kitty elect to be shareholder because as shareholders, well, actually, um, I think it would be more appropriate to put shareholder in this bucket here, much better than because option seller could be the liquidity because they don't necessarily want to own shares here, right? If you do the wheel strategy, they just do that mindlessly. They don't really, you know, be a long term shareholder. So, um, I think this is a better assessment on this particular one. So I should have think this through. But yeah, so I hope you get the idea here. These two are what you want to be in. Unless you're an expert like Keith, you could combine these two right here, right? You get the gamblers out there who try to mimic him, who thinks that you're gonna win big tomorrow, and not knowing the data, not knowing what might have happened, the dilutions and all that stuff. That's the risk that he was, willing to take. And I'm sure he's like, oh, even the dilution is not going to stop this, right? Again, speculation. Um, Not to be a knock on anything, of course. I'm talking about Rowan Kitty here. There we go. And this is why he converted to share right away because this is more stable. The facility will always be there for you to bet, right? And as kind of popular this type of stock is, especially GameStop, all the meme stock, right? That's what they want to tell you. Um, this is going to provide these type of people, the dealers, and the gamblers out there to always flock into this stock. They can't stay away from it, right? Because eventually they're gonna want to gamble, and then they're gonna want to lose. And each time they do that, GameStop and shareholders is going to benefit if you are long term, right? And again, you could combine anyone. For me, I'm combining these two. I am a long term shareholder as well as the option seller as well because every time I have my premium, I'm going to put it into my shares. So, my goal is to increase my holding, obviously, as fast as I can before the pop, before the run, before whatever, right? And so, the more time I have to accumulate, the better for me in the long run. All right, guys, I think that's all I have. I guess there's no comments, anything today. It's okay. Usually you got a few people listening in and, cheer you on, and sometimes you don't. Okay. I'm sure you guys are tired of hearing about GameStop. But anyway, this is just my perspective. Don't worry about it. I'm sure, you understand that this type of thing. But look at this. This is the weekly, okay? Fear and greed index was still at the very fearful time. So what my title say? Buy when there's blood in the street, even though it's your own blood. The fear is crazy. Now, you might see this drop here, okay? You might see the extreme fear at some point. So just be prepared for 20 or even $15 a share. just preparing you ahead of time. Nothing to back it up. It just this particular graph. It could stay in fear for quite a bit. It might be 6 more months. It might be, I don't know. Who knows? Just tame your expectation. But this analogy should give you some peace of mind here. I really think that the long term, you know, Brian Cohen is trying to facilitate, to give people the facility to come back to GameStop at some point in time, right? Of course, he's the businessman. He's here to protect his wealth as well as shareholders' wealth. And so it's not the oligarch that he's trying to protect here because this is majority retail shareholders. So, um, now how do I know that? Well, look at this, okay? Um, Retail ownership. Now, usually people stay away from this, okay? Because they think that retail is just so antsy, right? They would sell at any point, unpredictable, right? Again, this is what they train their people to say, or to say in the public, but in behind closed door, they're kind of eyeing GameStop as much as they can. So, could we go up to 4? I don't know. Do you have call option at that point? If you don't mind me asking, do you own shares or call option? Okay. Let me see. Is there any buyers? So let's see this one here. Calls. Ooh, somebody buy calls. 13. Okay. Uh, hmm, not much recent activity, but this is kind of delayed though. You don't have the quick shares. Oh, congratulations. No, I buy it. Okay, 31. Best time to dollar cost averaging down, in my opinion. Not a financial advice, obviously, but anytime, again, in my experience, I train myself to be unapologetically bullish in the sense that, or conviction. My conviction is very high in this company, and there's no way that I would be shaking out because of this price action dropping 12%, right? If you're new to this game, obviously you have to have the stamina to combat anything. And of course, to me, again, the trading that I have was from Bitcoin, crypto. So a 12% drop doesn't scare me. You know what scared me is that I don't have enough to buy at a low price. And usually when I just feel like uh, the emotion of other people are just like, oh, sell now or you're never gonna see your portfolio ever again in your life. You're gonna lose your life. That's usually when I buy, right? And again, like, uh, I've been demonstrated to myself, that um, that I don't have to wait too long, right? Eventually, it's gonna come up. But again, knowing these fundamental things right here, this is what ground me to not even like budge, right? And of course, a strategy, like a strategic plan on everything that you do in life, right? It just helps you, like, the price targets and what price are you willing to wait for. If you buy at 31, okay, are you do you feel some sort of way in 25, or do you feel good at 25, so that you could dollar cost average down? Keep in mind too, okay, Roaring Kitty bought at, well, his price average is 23. So um, that's a point of reference. And also two, Ryan Cohen bought in sometime June, I think. Hold on. Ryan Cohen bought around here, $22, I think. That's his cost average. Well, not cost average, sorry. Um, the the share that he bought, like 10 million shares on this particular uh spike over here. So the drop he bought. So yeah, this is after shareholder meeting, by the way, too. This is when I don't know, is it June? Yeah, around this time, right there. So, what do you think is gonna happen if the price drop? And think about this, okay? So I guess they did the meeting, and we were beating, the earnings by a couple cents here, okay? And guess what? The price went right. And what happened? I guess pre-market or whatever after hours, or we saw the Form A or Form 4 where Ryan Cohen bought in 10 million $10 million worth of shares at this price right here. So I assume some things like that are going to happen again. If not, hey, he might be tapped out at the moment. But, from what he is saying in the earnings call, he's pretty stoic about it. But I think he knew what the plan is. He's just not going to tell you, right? And if you are shaken by that, I'm sorry. I'm sorry to kind of like tell you to go. If you want to go, you could go. Because hey, this is what the point of investing is. You invest in a company for a reason. Now, for what you think this company is just gonna be staying in the retail footprint in the gaming community? What are they gonna do? Well, he's told you what he's gonna do already. He's gonna continue to add value to shareholders, and he's gonna continue to cut costs, right? That higher revenue, there's no point of higher revenue when there is not profit. And he's here to operate in a profitable business, okay? And if this balance sheet doesn't show you that he's capable, then leave. Simple. He's not owing you anything. He's not owing any analyst out there who wants Brian Susie, Yahoo Finance. He's not owing them anything, okay? And I love that. He's not hyping anything. He's not Elon Musk. He's not anyone. He's Brian Cohen, okay? So I love that. Okay, Jeremiah, you got shares. Okay, good. I'm buying all day. If it drops below 20, I have orders at every 50. Okay, nice. Hey, that's good, right? You don't like ebbs and flow of the market. I am fortunate enough to have a job that I have some free time to kind of like monitoring the stock market during the day. I usually listen to people covering it live. Kind of hop on and off and whatnot. But yeah, when I see the price drop, I was like, oh my god, I need to buy as much as I can. But then I did a sell call up here at 28, like I said. So because like I don't mind if I got exercised at that price point, getting some premium, my break even price point is 24. So just for a heads up here. Now, of course, depends on what the price doing tomorrow. I also have the covered call at 28 as well, but I'm planning to close it as soon as possible. And so because I don't want to lose my shares, right? So I just want to capitalize on this drop right here for option gamblers out there who wants this stock to go to the moon for tomorrow. So my point of view is that hey, if you want to make GameStop a casino, then GameStop is going to take you to the bank, right? To the ATM. Even Ron Kitty possibly know this too, right? Because he knows that long-term investor, do not ever want a squeeze, ever. Just know that. Okay. Not to be malicious or anything like that, because that skewed the valuation of the actual business, giving the business the bad rep. Okay, that it's overvalued, always, right? And so, just to be aware of that, and then you won't be crying in the end, but also have a game plan coming in, right? So yeah, shareholders, GameStop gets a cut if you want to make GameStop a casino. Okay. So get used to it. All right, guys. Sorry, I'm kind of babble a little bit here, but yeah, thank you so much for interacting. In the chat here. I appreciate each and every one of you, and I'll see you when I see you.